Good day. Ira Epstein of Linn Associates with your financial market wrap-up for this Monday, the 19th of October, 2020. And you realize we're but 2 weeks away now from the election. And we're right now getting on to 5:25 in the afternoon. So 2 weeks from now, we're going to have an idea that the election's over. I, for a moment, don't think we're going to know who won the presidency. I think we will discover a number of votes for the Senate, which is going to be a big event in local elections. Even that is going to be problematic with all these mail-in votes. I don't know how they go about counting them. I don't know how long they're going to count them. If they're saying, hey, as long as you get them in the post office box by November 3rd, well, that could take, in a COVID country right now, which we're getting into, that could take several days to just get all of them in. Then you got to do a count. And in tight races, who knows what that means. The events that we're looking at immediately in front of us have to be, number one, COVID related. If you're watching what's going on in Europe, the situation is even worse. Wales is being shut down for 17 days, full lock-in now. That's coming there. In the United States, we're in worse shape. I know in Chicago, they're talking that any day we could go back to our stage 3 of a lockdown. And that means the restaurants, the bars may close again. I don't know if it's stage 4, 3. It's terrible. I can tell you that right now. And things are getting worse, and we're in that flu season. We're getting snow in parts of the country. You've got to be very cautious with all that. Then we get to the COVID-19 relief bill. These are the big events. Are we going to get a deal? I think everybody's trying at the very end. I mean, I pay no attention to what the politicians say to the news. I watch, and watching's better. They're still talking, Miss Pelosi and Mr. Mnuchin. Neither are acting like it's not an over deal in talking. That means they're trying to get something done. I think the president will meet the Democrats' demands. That's my own guess. What's he have to lose? He can always blame it on them. Why not meet it? Could he sell it is the hard thing in the Senate. So today the market fell down, and I get it. It was fine until about 12:30, and then it just let go. A hard down day. Hard big moves on a Monday often lead to an attempt to correct that to a degree on a Tuesday. We'll see if that's going to be the case. The metal markets just sort of here cawing nowhere, trying to figure out what to do. The dollar index was bad. The thinking goes that if there's a COVID relief bill, I think the common thinking is that that's bearish the dollar. I think without one, people want to own the dollar for a safe haven. That sort of flies in the face of bonds and notes, which have been getting higher and higher yields. I did a piece today for TikTok for Bloomberg, where we were talking about the steepening curve yield, because that's the exact thing the Fed doesn't want to happen. They want inflation. They want the economy to pick up and allow inflation to take a bite. And then they can step in and start fighting with that. That's an easier fight than deflation, by far. Don't believe me? Look at Japan. If you take a look at the weekly area chart of closes, we didn't quite get back over this 3504.50. We've slipped, and for the week so far, and we are open tonight, we're down 24.5 points. We have what I call an inverted head and shoulder. We've pulled back to the neckline. That's not uncommon. If the market clears these highs, you know that I'm looking to challenge then this contract high and maybe the 36.50, if it can do that. You're at the mercy of all that's going on that I just spoke about. In terms of chart action, it went bearish today. You got me, bearish. Lower highs, lower lows. That is a definition of a downtrend. Next, I look at moving averages. The bias is still up, so this counters that swing down. It would not be uncommon for price to try to get to that 18-day average to see what it's going to do from that 34.11.5 zone. That's what I wouldn't be surprised with. The market failed in this general area of the upper Bollinger Band and now has pulled itself back. And momentum, if we look, we had embedded readings that as of, this was Thursday. Friday, you lost it. If you didn't get it back right away today, you got a problem. You didn't get it back right away. That often leads to price in the 18-day average making a run at each other. That's where you're at right now in this environment. Nasdaq, if we come back to Friday, you lost your embedded reading. If you don't get it back right away, watch out. And if you get my morning subscriber video, I was telling you that I thought that the pros were going to fade this market and put stops over the most recent highs and see if they can drive this market because they hadn't gained back right off the bat, those numbers. Remember, we opened Sunday night at 5 o'clock, so you're not waiting for the morning when I'm putting out my update. You've already got yourself into 12 hours of trading. So half the day has already gone by, the trading day, and you didn't do a very good job making your run at that number. Wouldn't be surprised to hit it at all. In the Dow, lost the embedded reading right here on Friday. Didn't get it back. Same thing, looking for that number to possibly be hit. One market didn't lose the reading. It's the Russell. So the Russell, though, got itself, I'm sorry, here, that's not what I wanted. I wanted the Russell. There we are. The Russell has kept its embedded reading by just this much. It's still embedded. You didn't lose it on Friday. Here's Friday's action. There's today. Here's Friday's action. You didn't lose it. You kept it today. It cannot afford much of a break. Just getting down under yesterday's low can keep the embedded reading, actually cause the embedded reading to be lost. You got to understand how the math of a Bollinger Band works. If you don't, go on Investopedia, read about it. Then we get to the VIX. Now here's the good thing for stocks. You're just traveling back and forth in this VIX between the upper Bollinger Band and the lower. Bollinger Band theory is that 95% of the time the market will trade within the bands. Eventually it breaks out of it. To break out of it often, the market will start going sideways and sometimes even compress for it could be a week or two as it keeps compressing. It hasn't done that yet. It compressed certainly this area into here, but it hasn't said that it wants to compress further. But that means that you're fairly volatile still and just getting these back and forth actions that the market is using one way or the other to fade the action. In the T-bond market, the trend remains down. Right in the front of what the Fed doesn't want to see. These are the long-term rates. The lower they go, the higher the interest rate goes. Same in the 10-year, but the 10-year is not trending at all. Here you have a higher high and a lower low in an oversold condition. Now, we are seeing that we have the 18 and the 100-day average at the same number. You're liable to get a bearish crossover if this market stays low or goes lower. So that would be a problem. The second problem is that's going to be a big point of resistance. Should you break down, even oversold, you might be challenging the lower Bollinger Band, might be, or because you're oversold, just sort of hanging in here in no man's land, as I call it. The dollar index. It's key if you're a dollar bear that this market get underneath this 92.95 area, instead of half, 92.95, 9300 level, and prove it can break down. Otherwise, you're going to catch people here and drive the market back up. I think the pros went short in the past 48 hours. I think they're trying to drive that market down. In the eurocurrency, the market has a pattern of a lower low and a higher high. There is no trend in this. And you're getting these broad moves. If you take a look, you were up today some 49 points, but at the day's high, you were up like 65, 70 points. I was watching it during the course of the trade, just sort of drifting right here. Japanese yen remains with the swing line down, but you're staying over the 18-day average. The two fight each other. You have nothing. Just sort of working on that line down a little bit. Bitcoin is still looking to me on the bull side. The question is this market getting ahead of itself when it's running that upper Bollinger Band? It is overbought, not embedded, so I'd be cautious. Now, this is really fascinating. Look at what's happening in energy. These are new break-low differences since this market was up over $4.5, $5. That's the lowest low we have recently made. Isn't that pretty interesting? That's what? It means that the differential between Brent and WTI, there's not enough there. Give me the shipping charges. Which one do I want to buy? When we take a look at the action, you've got higher lows, but I have lower highs. It's a question mark. You're caught, as I pointed out last week, between the 18-day average of closes and the 100 in a market that, do we have anything that embedded? Here's the close today. Here was the close on Friday, the day before. You are not embedded. You're just in an overbought market that is caught between those numbers, looking for something to give the market a reason to move out of it. In the WTI, you have lower highs, higher low. It's the same thing. The flip-flop of it is, if you come back here, you have the 100 up here, the 100 up here that we're staying over most of the time. That's the differential, not falling back quite as much as we are in the Brent. Heating oil market is not trending. You have a higher high and lower low. Momentum overbought. Natural gas, well, we are at that time of the year where these cold waves come, you get some demand, but is it enough? Because you're not in the hard, cold area. The funny part is that the seasonals at this time of the year from now, next week or so, are normally to the downside. So we'll see if the market pays any attention at all to that. You know, one of the things I do, especially if you watch me in the mornings, I talk in my subscriber videos, not the ones that you see for free, about a lot of these indicators and what I'm seeing and the different ways to use them, the different chart patterns. A lot of this is explained in our two guides to technical indicators that our good friends at Modern Trader and Futures Magazine put together. I resurrected it with the publisher of this, and we find that it's just one of the best pieces I've ever seen. I could go out and get newer pieces. That's easy. I've not seen anything better. And when I don't see anything better and in full color and easy to understand, I want you to have it. Why? Most people write about technical indicators in such a confusing way, you don't get it. Nothing should be that confusing. If it's that confusing, why are you even going to try to use it? If you can't understand the idea behind it, how are you going to apply it? This breaks that all down. Go to our website. We send it out to you as a link to a PDF. You can open it, you can print it, it's in full color. Each one's about 23 pages, and take advantage of our other offerings. I'm Ira Epstein. You have a good day. See you tomorrow.